Good morning, good morning. How's everybody doing? Hey, I'm Deep. How are you? Morning, Moran. How are you doing? Welcome to the 11th of June. Hope everyone's doing well. Oh, you're in Surrey. Oh, cool. It's been a long time since I've been to Surrey. Hey, Mr. Mother Truck, what's going on? Okay. Man, you just took me back in time, Armdeep. Jeez. It used to be the best gym in BC was in Surrey. It used to be called Gators Gym. It was ages ago, 30 years ago. Hey, Johnny, what's going on? Okay. Well, so a couple of things to look for this morning. The uptrend continues, my friends. The uptrend continues, okay? We have, in essence, we have this inventory. Port Jeff. Port Jeff in the house. Nice to see Port Jeff in the house. Oh, and our lows are creeping higher. Now, my target in all of this mess is up here at 60, 65 and three quarters. That's a big level for me. That is a level that is derived from back in the COVID days. And real quick, where I got that level from is where, if you just bear with me, I'm just going to scroll down and keep scrolling, right? This is my original COVID balance level, which was 2750 to 2810. And you doubled it to 2930, and that's how you just keep doubling and doubling and doubling these levels. And believe it or not, they work because we're always selling the same product. Even though we roll over contracts, it's the same thing. So the next big level is 6065. That enters our zone from 6065 up to 6306. So that's where that 6065 and three quarters comes in from. I did it on a weekly chart as well. And the double of this balance zone back from 2022 is 6064. So I'm off by about, a point and a half, 2 points. That's where the top of where I'm looking to see if we can tag that before the end of the week, maybe. I don't know. I don't like to put a time frame on things. So overnight inventory right now is short. The reason overnight inventory is short is because the value area, the blue stuff, is underneath yesterday's close. Now, same thing as yesterday. Yesterday we went up and then came down. Same thing. We went up, We took the previous day high, okay? This market, any penny stock traders here? Like any penny stock traders who actually know what happens in penny stocks. Okay? When you take out a previous day high, it creates buying and it allows the size traders to dump into it. And that's exactly what happens in yesterday's overnight and tonight's overnight. Okay? This time they didn't get the effect that they wanted. If you look, there's the previous overnight where we actually spent some time up here before the dump, right? And what that does is it allows traders to dispose of goods and then dump. This time they didn't fall for it. See that? They didn't go for it the second time. So nobody stood up here and bought at 60.48 for any length of time. So they dumped it, right? They dumped it all the way down. As you can see, right? Yesterday's low, nowhere near the value area low of the previous day, right? So we're in distribution, folks, right? We're in distribution, and everyone who is short, position short this move, God bless them, are the ones that are keeping the market up. Because what they're doing is they're coming in and they're buying to cover. So overnight inventory is short. It allows the people who got short yesterday to come in and cover. You can see the volume in time, right? Yeah, no, penny stocks are, if you're a penny stock, well, if you're a penny stock manipulator, like I used to be, right, there are certain things that you do to draw buyers in. And one thing that you do is you take the previous day's high. It's a lot easier to do when you control all the supply. Because as soon as you take out the previous day's high, it brings in all those suckers that chase price. The breakout traders, right? As soon as a market breaks out, you get a whole new bunch of buyers that come rushing in. First of all, you get the shorts who are trying to cover, who have their stop at the previous day's high. So they start the little party off. Now, if you have control of all the supply, you can just cut the supply, bring the market up as high as they'll chase, and then dump into it, right? This is also known as a gap and trap. These all sorts of things are manipulative techniques to sucker in people because people chase price, right? People trade emotionally. They don't trade like it's a business. So it's very easy to trap them, right? You can trap them, you can herd them, you can move them wherever you want, like little marionettes, right? So what we teach in this room in the trading syndicate is how not to be a sucker, right? We teach you how to be smart money, trade with the smart money, help you pass those evaluations, help you actually get money out of those funded trader accounts. If you're trading your own money, we teach you how not to lose it, right? By making silly, stupid, bad business decisions, right? So if you hear things like FOMO and revenge trading and tilt, those are all just euphemisms for bad business. Those bad business decisions, right, that would get you fired in any other line of work. But since you work for yourself in trading, you can't fire yourself. So let's see tonight as London opens and the European markets get going here. Do we take out that overnight low? Do we take out 60.19 and a quarter? And here's a very interesting level that you're going to be watching is right here. 60.14, 60.15. Right? That's the excess of yesterday's. That's when we put in yesterday's low. And every subsequent move down, there was some serious buying at 60.14, 60.15, which allowed the market to rip back up. Right? See, if you look at that overnight, if the J period low, The afternoon pullback low couldn't take out the 15s. So, big level for us to watch today, folks. Okay? If we get underneath the overnight low, look for the J low of yesterday. That was the only decent trade I took yesterday, was buying the 17s against the J low on that inventory correction, right? This J period in market profile is a great trade if you make it work with the candles too. Market goes up, runs out of buyers, puts it on sale, right? And hit those bids there. As soon as that happened, you get a nice rebound, a counter inventory trade, right? I like counter inventory trades because I never usually get this short, but I can grab a couple of quick points on this long here from like 17 to 22, 17 to 23. That's good enough for me, right? Now, overnight inventory is short. There's the close of yesterday at 40.5, right? We have overnight trading is very helpful for traders who are stuck. If you're trapped short, say you got trapped short here in J period going into the close, and you added to that short here, right? You can add some in the overnight if you had the bullets, but this allows you to do some covering, you see? So the overnight session allows those who are short to try and cover, and it allows those who are long to get rid of their inventory for profit, right? You guys ever heard of that's why everybody goes, they talk about the London Open and the Tokyo Open and they talk about all these Asia and blah, 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 blah. But it's all just inventory, right? All of it is just allowing people to do business with less competition. Does that make sense? So my balance zone is 24 quarter to 27 and 3/4. That's where the cost basis is. Double it up to 34 and 3/4. VWAP is just lurking around there as well. So we're underneath VWAP, so we're in accumulation now. The point of control in the overnight has moved down under 28, right? So we're bid 22, nowhere near that 60.15, which is where that J low is, right? So this is going back and forth like a washing machine. And it's collecting all the trapped long contracts above, and they're falling into this washing machine, and we're going back and forth. While this happens, we create a balance level, because that's what the wholesalers do, is while the business is slow, right, they'll buy everything under 26, sell everything over 26. So they work both sides of this range. That's called running a box, right? And that's where they build their inventory, right? So what we do is we use this to take trades like the look below and fail, the look above and fail, because we're in rotation. Until we get out of rotation, you just trade the rotations, right? So, for example, when you see the market cannot take out 24.25, or if it looks below 24.25, comes back up, take a little long, put your stop here, and you sell into that rotation higher. Hey, Shark, what's going on? Same thing with shorts. Look above and fail, comes back under 27.75, right? You've identified that sellers are competing. You sell the 27s, you put your stop at 28, and try and cover down here under 26, right? So you're just trading this rotation back and forth. You trade the edges of it in. You trade the outside edge in, not the inside out. A lot of traders will get stuck in the middle and try and work their way out of the middle of a zone. And you can't do that. You always want to trade from the outside in. Why? What is the business reason for trading from the outside in? Because that's where size is executing. There you go, Phil. Hey, Phil, how you doing? Yeah, you don't get stuck in the middle, right? Just like the old song, clowns to the left of me, jokers to the right. Here I am, stuck in the middle with you. Oh, yeah, and we do the same thing every day, you know? So, quick little plug for the room while we're waiting for this market to move itself. You know, if you enjoy what you're watching, please like and subscribe. Also, come and give us a shot at the Trading Syndicate. We have a really good group of traders. It's where I teach and trade live every day. Right? We'll work with you to get you profitable. First, we'll work with you so you don't lose money, right? Once you stop losing money, then you can start making money. We'll teach you the business reasons behind the trade, and we'll also teach you how to work with those funding firms. We have a lot of our guys and ladies who work with these funding firms and actually get payouts. So use the code in the banner below there. And the code for the funding firms is also in the description. So please come and give us a shot. We appreciate it. Look, and the thing is, we don't charge a lot, right? Most of these trading rooms, they charge a couple of $100 a month. We charge like $40 a month, and you get a discount, 25% off. So it's less than going to Starbucks every day, and you won't get indigestion from the bad coffee. And I promise you, you will learn more in a month in my room than you will in 10 years anywhere else. You'll actually learn how the market works, so you won't be fighting it. You teach you how to do good business. Hey, Raj, what's going on? Okay, now we're just stuck in the middle of this blue balance zone. Now, how do you trade this? How do you trade a market like this if you're a scalper and it's not moving? Well, you got to sit and wait. Now, if you're a larger trader, right? And what we also teach you, we'll teach you trade management skills, right? You can build a little position. You know, you can buy the 24, 25s, use 23 as your out, and as the market rolls up into the 27s and 28s, be a seller, right? Oh, you came across my phone room stories last year? Man, you know, I've lived quite a few lives. And yeah, running a phone room or a boiler room as they call it. That was an experience. You really, really learned a lot about the mechanics of how it all goes together because you're managing salesmen who are trying to get people to buy the stock. I was the trader for the phone room, so my job was to keep the stock at a certain level because nobody wants to buy a stock when it's going down, right? Learned a lot. And I worked with some real characters. It wasn't not the most prestigious job in the world. It was the only work I could get after my boss got arrested for trading for the mob. So I was persona non grata. Nobody would touch me. Yeah, nobody would touch me or give me a job, even though I was clean. So the only guy who could give me a job was a guy who had a boiler room, and he looked like Colonel Sanders. You always wonder how you get in these situations in life. There's a seller at 27 and a half. You got your cowboy hat and boots? You going to be a stock promoter? Perfect. I miss stock promoters. I miss in Vancouver we used to have like all these flashy stock promoters. They'd dress like they were in Miami Vice. Like old guys with primatans driving Corvettes, wearing salmon-colored blazers and big gold pinky rings and just characters. That's back when the days when you'd sit down with somebody and convince them to buy stock. They'd put on these big. Do you guys ever been to a dog and pony show for a public company? Because Vancouver used to have like 300 mining companies, and they'd all put on these like little events, right? The annual general meeting or broker dinners. They'd get brokers and they'd feed them and hope that the broker would put their client into their stock. It was good times. It was the 80s and the 90s, RMD. 80s and the 90s. Before you were born. Well, you're from Surrey. There was some pretty serious stock promoters who came out of Surrey with your last name. Hey, Jerry, what's going on? Probably some of your uncles. Hey, Laura, what's going on? How you doing? Okay, now let's see if we can creep over 27 and three quarters. Is this thing ready to go? 6 minutes to the London Open. Hey, Andre, how are you? You audited some of those penny stock minies in the company in the 80s? Oh, cool. Oh, interesting. We probably know a lot of the same people. I'm sure a lot of them were just, you know, back then a mining company was just a piece of moose pasture, a publicly traded shell, and a couple of good salesmen. No, but it was fun. Yeah, and a hole in the ground. Well, yeah, if you were lucky, you'd get enough money to drill a hole in the ground. But at first, it was just a piece of moose pasture. Seller at 27 and three quarters. Now, one of the things about this price action is As soon as you're a retail trader, especially if you're a scalper, and you do your prep, we're all set up, and you see this sort of barcode. It looks like a barcode on a box of Kellogg's cornflakes, right? You know, that's really not tradable, right? We need a little bit more follow through. So right now, this is a wholesaler's business, right? Because they don't pay commissions and they trade differently. It's a different business. They can work both sides of that box. It's a bit harder for us, right? We're more likely to get chopped up because of the lack of follow through. I would imagine we have, Raj. I have not checked my email this morning. We have, what is it? CPI, PPI, Magnum PI. One of the PIs, right? CPI, 830. So I would imagine that we've gotten a margin increase email from, if you trade at a wholesale brokerage firm like AMP or one of those places. One of the PIs, right? CPI, PPI, Magnum PI. I never pay attention to the news. I just make sure I'm not in a trade when the news comes out. That's my most important thing about news. Let everybody else get trampled, right? Let everybody else get run over, and then we trade. Now, see, there's that seller again, right? So if you sold one at 27, right? I'd put my stop really at 28. It's no use spending any more money than that. And I'll go put a bid in at 25 and 3/4 and see if we get some rotation down. And if we take out the 28s, I scratch, right? I'm just seeing how aggressive that seller is. It's not really aggressive. That doesn't really give me a lot of comfort. I want that red line, that offer, to keep lower, lower, lower. Crude oil inventories. I've never traded oil. I've drilled for it, financed it, ran oil stocks, but I've never actually traded the futures. I got clipped. It was just one micro. So let's see if we can hold the 27 and 3/4 on the way back down. Because there we go, right? So if we can stay above this 29 line where the sellers were, right? I bought one at 20. Oh, where did I buy it? 28 and a half. It's not the greatest fill. Well, it's not bad, right? Let's see if we can go and offer it out at 30 and get a print. Can we get a 30 print? Now what I'm doing is I'm just test trading using the micro. You don't have to do that, but that's what I like to do to try and get a sense of if this market is ready to go yet. The intelligent thing to do would have been to build a long position under 26, but I wasn't in front of the screen when that happened. So watching this 29 area, right? If we start offering underneath it, then I know that my long trade is no good, right? So you can manage your expectations, right? So you're not hoping and wishing, right? If we start losing that 28 half bid, right, like right there, right? Then you can mentally prepare yourself to scratch, right? God, there's no follow through at all. So I scratched a short. Looks like I'm going to scratch a long. Let's see. And I will have confirmed to myself that I should have just had another coffee. I'll take it out at 29 and 3/4. Okay, I just hit the bid. I'm flat. Now it'll go higher. As soon as I sell, they always take it higher. Is the sell based on a potential look above and fail? The sell here was, which I scratched out on because it got bid at 26 and a half. So I scratched that. And then I went long when it went above. I went long 28 and a half and I just sold it at 29 and 3/4. And it's up a couple of ticks. Gosh, it is really slow. That's the trade I wanted. See, I was too early. That's okay. Now they're going to backfill. Let's see if it holds 29 when they backfill. Yeah, that's the one problem about the night markets, right? There'll be flurries of activity and then it's quiet. And then there's a little flurry of activity and then it's quiet, right? It's just a frustrating time for us retail traders right now. The reason is because the macro world really doesn't know what to do. The president keeps changing policy, getting into little lovers spats, all this stuff. Has anybody looked at Tesla, how it closed yesterday? right back up to 328. High of 327.83. My level's 328.01. So Tesla went and flushed. That was the trapped long inventory. He flushed it down to the 270s and right back up in 3 days. Right? It came into its cost basis, stopped selling, and rotated back up. Which the tinfoil hat guy in me thinks, was that whole thing just a little bit of drama to flush the stock and get some people trapped short under 300? Maybe, right? I mean, most of these guys, they're pretty unashamed um, about stock manipulation now. And the president has disbanded the SEC. So, you know, the game is afoot, right? So the overnight POC is at 28. Most of the position is just under 30. We went up to 32 to try and sell it, but we only had buyers for about a minute. So it's not quite ready for prime time yet, right? The only reason why I'm thinking long now is because overnight inventory is probably 75 to 80% short, right? You can see the position now, right? Candle traders, right? You can see the position for the last couple of hours is clearly under 27. So as long as buyers come in, we can distribute, right? Balance works, and it's not me, it's just the market. Balance works really nicely because markets are automated now, right? Everything is electronic. So you don't have some knucklehead who decides where price is going to stop and, he spills mayonnaise on his shirt so he misses a fill. You don't have that human error. So markets stop at very, very precise points, right? Because the machines are in charge, right? They don't get distracted, right? All of that stuff. So you guys call this false breakouts, right? These are false breakouts, right? They're just little tests higher to see if that'll bring in buyers. I missed this short here. See, when that red candle hit that seller line, I should have been shorting 30, stop 31. That's okay. Let's see if we do a look below and fail of 27 3/4 now. If we do, no, not yet. That's just going to be a mess until we get some more order flow. Let's see. If you are going long, know that the seller at 29 will probably still be there. Yep, there they are. Just the tag. See how we just tagged that area and backed off? Because if they were selling there, here, and here, and here, they're going to sell there again. There we go. Now we got a nice rack of lamb going. If you have a couple of contracts, I'd sell into this strength. So this time I went long 28.5 against 27. I sold one at 29, and I sold the balance up here at 29.5. Not the greatest trade in the world, but kind of getting my instincts right. But that's the look below and fail. Ugh. Took me a couple of tries, right? So the first couple of trades I took with you guys, I scratched, right? Took me a little while to kind of get into the, it's almost like the market is trying to tell you and you're listening to it. Sometimes it's a little unclear. So you got to zone in. And as an older trader, because we didn't have all this fancy stuff, right? You'd take test trades. What ticker is this? This is the E-mini futures. Yes, yeah. And we are still in the June contract. Which reminds me. We'll probably roll our contract over next week. Let's see what the volume is. So we've traded 61, and this is how we do contract roller. Oops, sorry. So you can see the volume in our contract is 61,000. The new contract is 5,500 contracts, so the volume hasn't caught up yet. And look how much, it's trading at 60.82. You see how when you have the 1-minute candles lining up at the tops here, that's how you can tell that there's a constant. Like you don't need a depth of market or anything like that. You know that the sellers are competing there. Now, if it offers above and prints, the sellers have seen buyers. Right? If those sellers here, if they don't see buyers, they're going to chase the buyers down because they've got to get rid of inventory. Right? Because if you're long here, you don't care whether you sell it here or here or here. You're still making profit. All you got to do is make sure that you get rid of your inventory before somebody steals your customer. Right? And I think if you're trading, I think it's helpful to think of it like you're a merchant, right? As soon as you're long, right, you're long 10 contracts at 27, 28, right? And you're trying to sell them, and you'd love to get 32 for them. But what if everybody else is selling 30? Right? I'm long 10 contracts at say 28. I'd love to get 32. Hell, I'd love to get 35. But Phil and Jeezy and Lara and Raj and Jiri, they're all selling the 30s. So I better get in there and compete. Otherwise, they're going to steal my clients. They're going to steal my customers. Do you think it will be volatile during the quad witching next week? Uh, I have no clue. I'm really bad at predicting volatility. Because everybody talks about the witches of Eastwick, right? And everybody expects volatility, and then nothing will happen. I don't know. I'm really not. One thing I do know, Laura, about this market is I'm just going to let the chart tell me what's going on. So if if during that options expiry and that contract expiry and all of that stuff, if price starts jumping around a lot, then I know it's getting volatile. I always expect the worst and prepare for it, right? I'm never good at predicting. I let the market tell me. I've really learned that the hard way is just to allow the market to tell me what the heck's going on and not try and, yeah, like looking at cycles. And there was this guy on Twitter, was it yesterday or the day before, and he was like the waves of Elliott, right? And he was saying Bitcoin's never going to get over 112,000. I was like, wow, that's pretty bold statement. On a product that only has 21,000 coins, 21 million coins, right? So I don't know, right? I don't make those calls, right? And what that does, Laura, is it keeps my mind clear, right? You could call me like a simpleton, right? I look for when the market shows me that my business is present, right? Like the look below and fail, the look below and fail. That's when I buy a little bit, sell a little bit, right? Make my money and keep my mouth shut. I never try and predict if we're going to have volatility. People love to do that, right? They love to say this is going to happen and that's going to happen and this is going to happen, and you know, and so they look like a prophet, right? And I just I can't get into that. It's kind of a waste of mental energy for me because I need to focus on when my trade setup occurs so I can take the trade, right? Because I've been around for 33 years and retail trading, I've never experienced so many opinions as when with retail traders because institutionally all you're doing is working order flow, right? Lara is my customer. She gives me an order. JJ, go buy 200,000 shares of this. Next order is go sell 300,000 shares of this. Next order is go short this. Next order is go do that, right? So you're not thinking about what it's going to do. You just are focused on carrying out the agenda of your client, right? So you're not trying to predict what's going to happen in the market. You don't spend any of that time because you're executing, right? Whereas retail traders sit around and they come up with all these theories, which is okay, but how well does it really serve you in making money, right? That's why you'll see people, they'll have like a 14-page trade plan that they do every night, but they're not profitable because there's no way that you're going to remember all of that when you're in the heat of battle, right? Execute your agenda. When your agenda shows up, take the trade, pay your insurance, and take a profit, right? Just simple business, right? When your agenda shows up, you take the trade, you pay your insurance, and you take your profits. Does that make sense? And this way, have you seen some of those trading plans on Twitter, Phil? It's like it's like this huge paragraph on what's going on and blah, 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 and, you know, but they don't make any money. How can you remember even a 2, 3 page trading plan when you're executing? You can't, right? But I can tell you right now that there's a seller at 60.30, right? That's as clear as the nose on your face, right? I don't care about your trading plan. I know there's a seller at 30, and when that seller lifts, there'll be another seller at 30 3/4, right? That's all I care about. See, look, there's a seller again, right? Do you have a margin increase? Okay, that makes sense. My job and what we like to do at the Trading Syndicate is we want to give you practical ways to make money in this business without you having to have worked in the industry, right? Without you having to buy expensive software. Look, the sellers at 30 have seen buyers, right? The sellers of 30 have seen buyers. So they raise price. That's what's going on right now, right? Overnight inventory is short and it's trying desperately to correct upwards. But we still have product for sale, right? Has a hard time going under 29 because nobody needs to sell it under 29, right? If they have to sell it under 29, they sure as hell will. But if you've got buyers at 29 quarter, half, 3/4, 30, sell it there, right? Right? Just nice, simple. Here we go. Let's go test 29 again. Oh, see, look, right? So there was a little bit of a desperate seller, so we took it under 29, came back up, right? Practical information. Okay, so that's what's going on. They stop selling at 29. They sell hard at 30. Is that tradable? If you're faster, you can maybe take it once or twice, right? If you're not fast enough to take it, just leave it alone and wait for an edge, right? A proper edge is under 27 3/4 and back up, or under 24 3/4 and back up, right? Right? What do we got going here? We got barcode, right? Look at this. We're taking this and we're selling it here. Why are we selling it here? Because people are only willing to buy it here. If people were willing to buy it here, the market would be up at 33. But at this point in time, we only have enough buyers to sell it over 29. But that's not bad. If you're long 5,000 contracts and you're selling 5 up here, that's good wholesale money, right? Makes it kind of sucky for us as retail traders, but at least you understand the business, right? And when you understand the business, you have a higher likelihood of two things. One is not just blowing money on stupid trades, right? Right? 99% of retail traders trade at the wrong time because they don't understand the business. Now we had to put it on sale and we're coming right back into cost basis. Right? See, there's the cost basis. We came right back to it. Right? Put it on sale. So let's see if that brings in buyers. Right? If you know when to do business, you will trade less. If you trade less, you're going to take a lot less bad trades because you're only going to take trades when the terms and conditions under which you do business are met. That is what a trade setup is. Everybody asks you what a trade setup is. A trade setup is a repeatable business execution plan which is based on when your terms and conditions for doing business are met, where you can manage your risk. That is a trade setup. Your trade setup should also be, it should be repeatable, right? It's based on common sense business practice, and it should be scalable, right? So the look below and fail that we do here on the 1 minute chart, you can expand that out, and when the market does, when you get to be a bigger trader, there's a beautiful look below and fail here. Look below and fail from 58.60, rotation back up. So we have some people who'll go in, and when it comes back up over 60, they'll go and buy 100 contracts here, right? Between 60 and 70, and they'll use this as their out and then sell into this, right? That's the same setup as on a 1 minute candle chart. You learn how to do it on a minute to hone your skill, right? So you learn how to manage positions. You learn how to manage the business, right? Just like when you started a company, they don't make you CEO, right? This is a CEO trade, right? The 1 minute chart is a trade that you do in the mailroom when you start. You got to start somewhere, right? So it's an expandable, that look below and fail, it's also based on the oldest business theory in the world, right? Ever since the first caveman sold rocks, when he started running out of rocks, he could raise the price of the rocks, right? Very simple, right? Supply runs out, price goes up. It's not rocket science, right? You folks deal with it every day when you're in the store buying stuff, right? Right? So it's a repeatable execution model that's based on common sense, and you only do it when the terms and conditions under which you do business are met. So you're a snob, right? So, like, and have you ever tried to pitch an investment idea to someone who's a billionaire, someone who's really wealthy, and they kind of look at you like you've got a disease, right? And they're like, I don't know. I'll have my people look at it and get back to you, right? They never say yes, right? You got to have that attitude when you're trading, right? Don't let them get your money indiscriminately. Protect your capital, right? And only do business when it makes sense to you and you can manage your risk. Because it's all about, trading is not about making money. It's about being here tomorrow and the next day and the next day. So I tell you folks, like the old savage bastards who taught me this business, right? Be long-term greedy. Short-term greedy gets you, right, a ride on the bus to your cardboard shack of a house. Long-term greedy gets you the Bentley and the mansion, okay? Be long-term greedy, okay? You'll get there. And that's it for me. Have a good morning. You know, if you have questions, reach out. I'm around. And we will see you at 9 a.m. Eastern Time for the next session. Thanks for being with us. I really appreciate you folks. Bye for now.